more stimulus with a stock market crash. I have all the details and exactly what you need to know right here in the video. Let's get into it and discuss what's going on. First off, thanks so much for liking and sharing this video with those buttons down below. I really appreciate it. Thank you so much. Also, do you know someone that may benefit from this information here in the video? If so, will you please make sure to share this video with them with the share button down below? Thank you. Really appreciate your support, and let's get into it. All right, now this is a really good question. Just the other day, as the market was selling off, I received an email from somebody who said, hey, I see the market's going down. The market is crashing and burning. Do you think we're going to get more stimulus as a result of the market going down? Again, this is a really good question. I responded to that person and said, hey, stay tuned. I'm going to make you a dedicated video about this because this is actually a really, really good topic, and a lot of people want to know the exact same thing because it seems like every time the market goes and crashes and burns like what we've been seeing lately, they come in and they approve hundreds of billions or trillions of dollars in the form of stimulus packages, and then boom, there goes the market off to the races, up yet again, right? So the person that reached out to me, hey, you know who you are, here's your video, okay? All right, so anyway, I love talking about this because here's the thing. I talk about, the markets. I talk about Social Security. I do talk about stimulus every so often as well because I have people asking me literally on a daily basis about it. So I thought, this video would actually be a really good one to focus on because I'm watching all these things very closely all the time, every single day. I have been for years. But here's what's interesting about it, okay? It depends what you say or what you mean when you say stimulus, okay? Let me break this down really quickly, okay? Now, there's something called quantitative easing. Now, a couple years ago, well, I shouldn't say a couple years ago, it was quite a few years ago as well, they had it called Twist. There was this Project Twist, right? Remember that? There's a whole variety of different names that they call this thing. But basically what it is, it's essentially printing money and it's like plowing into the economy, right? It's economic stimulus, okay? Now, that's one form of stimulus, and that's basically caused by the Federal Reserve, right? They come in and basically they ease. In other words, they just basically print money on a monthly basis and then just, stimulate the economy with it, okay? Now, that's one form. Now, I would anticipate the person that asked me this question is talking about stimulus checks, okay? Would we be getting a stimulus check as a result of the markets melting down? Very interesting question. Now, I don't want to sidestep the question, but I do want to preface it a little bit further before I give you just a solid yes or no answer on that because it's kind of a loaded question, realistically, okay? There's a lot more to it than just saying, sure, we might get stimulus because the market's going down. It's not like that, okay? But here's what it comes down to. When we get stimulus checks, why do we get that? Because they're trying to be nice and they want us to take care of ourselves and our families? Because they want us to go out to the stores and buy a bunch of stuff that maybe we need or we don't need? Or why are they doing it, okay? Here's why they do it. They send out stimulus checks to stimulate the economy. That's literally the purpose of stimulus checks. That's literally why they do it every single time. Now, the stimulus checks that they send out are not having anything to do with the stock market in particular, but rather it has to do with the economy. The economy. When the economy goes down, when the economy goes into a recession, when the economy goes into a sharp economic contraction, that is when they come out and they approve hundreds of billions of dollars or trillions of dollars like we saw the last couple of years here, and they print all this money up and they send out a small portion of it in the form of stimulus checks, kind of as a little smoke screen to distract us while they take all the other trillions of dollars that they print and they do something else with it. They siphon it away and who knows where it all goes, but they kind of do the stimulus checks as a little smoke screen to distract us all so they can basically rob us blind, right? It's kind of what it comes down to. But anyway, so the whole purpose of the stimulus checks is to stimulate the economy. Remember, taking a stimulus check and investing it into the stock market is not stimulative to the market, it is to the market. To the economy, it is not whatsoever. Putting money in the stock market does not stimulate the economy whatsoever. What they want us to do with stimulus checks, and this is the whole purpose of them and why they're officially called economic impact payments. That's literally what they're called. EIP, economic impact payments, is because they want us to impact the economy with our checks, okay? So what they do is they basically, they determine somebody's income and they find the threshold of who would need the money, who's going to spend the money, stuff like that. And then they approve them, okay? Whatever that happens to be for whatever percentage of the population and whatever income thresholds they identify, they push these checks out. And then they know the vast majority of people are going to take these dollars, take these stimulus checks, go out to the economy and buy stuff. Groceries, clothes, TVs, shoes, whatever it happens to be. I don't know. Those are just a couple things that came to mind. I mean, it could be anything. Anything that is an exchange of money for goods and services is stimulative to the economy. That's the whole purpose of it, okay? So the whole point is to get a bunch of money, hundreds of billions of dollars into the economy very, very quickly, and they know this is the best way to do it. When they give the consumer money, they know the vast majority of the people are going to take it and spend it. That's the purpose, okay? So when we saw a couple years ago here, when we saw all this money going out in the form of stimulus checks and enhanced unemployment benefits and the PPP and all of this stuff like this, we continue to see a lot of that money was used for paying down bills, investing in the stock market, buying crypto, paying off debts, paying down credit cards and stuff like that. All of that is not stimulative in the way that they want it to be. That is not in exchange for goods and services. That's just, all those other reasons that I just gave you there, okay? That is not stimulative. That's not what they want. Saving money is also not stimulative. So when they saw all of this money, trillions of dollars, in fact, I believe it was in August of 2021, I think it was, we had something like $2.1 trillion in savings in this country. That's a lot. That's a ton of savings in this country. We never have that much savings, right? We usually have $800 billion in savings. It's not nearly 2.1 trillion, okay? So they saw all that and thought, we've got an inflationary type of situation coming. They knew this because the situation was that we had all this money coming in, we had all this money sitting on the sidelines, and they basically could see that we've got a lot of buying power sitting here, and it's not even being spent yet. So we knew that, this inflation situation is going to be long, it's going to be prolonged, and it's going to last quite a long time because consumers have so much buying power. We need to get all of that excess money through the system, right? Well, eventually it happened. They eventually got it all away, right? So we're right back down to where we usually oscillate around, kind of that $800-ish billion or so, give or take a little bit, is kind of where we sit. Obviously it changes all the time, but we got rid of all that excess savings, okay? And that's, I don't know. It's good/bad. I don't know. Just take it however you want. But when it comes down to it, okay, the stock market does not necessarily predicate the passing of stimulus packages that contain stimulus checks, but rather this much as well. Remember, what does the stock market do? Well, some people say, who cares? It's just the stocks. Here's what the stock market does. It leads the economy. So when we see the stock market trading significantly lower and crashing and burning, like what we've been seeing here lately, that is leading the economy. It is showing us investors have no confidence in this economy. Investors are pulling their money out of equities and they're going to cash. What's safer, having money in a stock, in equity, or having money in cash? Well, it depends how you look at it, okay? I mean, here's the thing. Nothing is really safe. Reason being is cash is just going to be depleted because of purchasing power and inflation, basically losing its power, but that is going to be less aggressive than an equity that falls by 10, 15, 20, 25, 30, 50%, something like that. It could lose a lot more value than what inflation is going to erode cash away by, okay? So just remember, when we see these crashes and burns in the stock market, a little bit is fine. That's not a big deal. But when we see these prolonged sell-offs in the market, it simply means that people are losing a lot of confidence in the overall economy. And that simply means it's being reflected in stocks. Investors are going to cash, they're going to bonds, they're going to safe havens where they're not sitting in equities that can lose a ton of value very, very quickly, okay? Now remember, this is all going to be reflected as well in the economy. So the stock market is an overall basically precursor of the economy, okay? So when we see what's going on lately, we can probably anticipate, there's definitely going to be more economic weakness coming in. And like I said a couple minutes ago, when we see economic weakness, when we see an economic contraction, when we see an economic contraction, a recession, whatever you want to call it, that is when stimulus is approved. That is when Congress comes together and they pass hundreds of billions or trillions of dollars in stimulus packages, and they give them names like the CARES Act, American Rescue Plan, and all of these other funny names that they sit around and think of, and they come up with these names, okay? That's the whole purpose of these. And then they take all the money that they've approved. Once it gets through the chambers, the House and the Senate, they go on to the president to sign it. Once all this stuff happens, then the money goes out in all these different ways, right? There's tons of different ways that the money is distributed. And then the whole purpose of that is to get the money into the economy quickly and stimulate yet again to reinflate the bubble that has popped. Make sense? Okay, so that's kind of like a big overview picture of the stock market and how it relates to the distribution of stimulus. It's not 100% directly related to the stock market, but it does have a correlation because the stock market is like a crystal ball. It shows us the future of the economy. So if you ever want to know what's going on with the economy, just look at the stock market. Not that hard to figure out, okay? The stock market leads the economy. So if you want to see what the economy is going to do, look at the stock market over a period of time, not on a day-by-day basis. The economy is not nearly as volatile as the stock market, but look at the stock market on, say, a couple-month basis. Look at the last couple months. What has the stock market done? That's what the economy is going to do coming forward, okay? So that's what you need to know. And when the stock market goes down massively, watch out, because the economy is going to do the same thing. And then when the stock market bottoms and goes shooting up like a rocket out in, up into outer space, then guess what's going to happen then as well? We're going to see the same thing with the economy shortly thereafter. Make sense? Okay, so it's not like a one-day delay. It's usually a couple months delay. The stock market versus the economy, maybe a couple months. It could be even like a month. I mean, there's somewhat of a delay, but it's not like a day-by-day basis. It's, maybe a month, a couple months, something like that. And then that's how it goes, okay? So anyway, I hope this helps you. And the person that asked this question, I hope that answers your question. If you want me to come back and elaborate on this further, I definitely can do that. Love talking about this stuff. It's very, very fascinating to me. It's like a big jigsaw puzzle that you got to put together. But honestly, it's not that hard. It's just like all the pieces of the puzzle are right in front of us. We can clearly see the picture of what it's going to look like. You just got to kind of assemble the pieces in the right order. And it's like, yeah, obviously we know what's going to happen here. Not too hard to figure out, okay? All right, so anyway, I hope this helps you. Please make sure to subscribe down below if you haven't done so yet. Share the video with your friends on my social media. Check out the other videos here on the channel, the thousands in the video library, the ones I've hand selected for you down below in the description or the top of the comment section. And right now, popping up your screen as well. You'll see some videos there. Thank you. Really appreciate you. Have a nice day. Take care, and I'll catch you again later in the next one.